All right. Good morning, Doug. Let's talk about the market because we had another bank that collapsed this week, First Republic. It's the second largest bank failure in American history. This is I think the third or fourth bank that's collapsed this year. It seemed like yesterday, for the first time in my observation of the markets, the complacency seems to have gone a little bit in anticipation of maybe the Fed announcement today. I'm not sure, but what do you think about are we in a banking crisis? Are we in a financial crisis already? Just don't realize it yet?
Yeah, I think we are actually. And question we have to ask ourselves is, well, what is that going to do to the stock market, which is holding up nicely? And what's it going to do more important to the bond market, which is holding up nicely? I mean, they're both down from their peaks, but not very much in the big scheme of things. Uh, yes, I think that in today's grossly over financialized world, um, I think this is the start of another crisis, a real crisis this time, where they've already pulled out all the stops. They've tried quantitative easing, which everybody calls it, but it's just massive money printing, massive inflation. And they've tried ZERP, zero interest rate policies, which made things better for a little while, but as we can see, made things worse. So what else are they going to do? Now they're going to try digital currencies, which are going to be an even bigger disaster. And yes, I think this has actually started at this
Hmm.
point. And almost all the banks in the world, not just in the US, but a few banks and few bad apples in the it's not a question of a few bad apples in the US. All the banks in the US and the world, basically, are they're all bankrupt. Why? Because they're all run on the fractional reserve system, which is facilitated by central banks. Uh, and once again, I'll repeat this because people just don't grok it. If you're going to run a bank and you're going to lend out money the way it's always been done, because this is the way it has to be, a bank is just a place that makes it convenient for you to store your money. And if you want your money right now, you have to pay the bank to store it. Money being gold, actually, commodity money, necessary. Sounds primitive in a computer age, but it's not. It's important. It's critical. Uh, so if you want the bank to store your money, just to keep it safe for you, gold, where it won't lose value. Uh, 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 you have to pay the bank and say, give me some money back. I don't want to pay you. You pay me. The bank has to lend it out. And the bank will maybe pay you 3% and lend it out for 6%. But it can't do that. It can't do that unless it knows that you're going to leave your money there for the length of time that's lending it out. Otherwise, you've got a mismatch. And if there's a run on the bank, it's illiquid and maybe it's insolvent if it makes imprudent loans. 30-year loans are necessarily imprudent. It used to be the way it was done is that there were short-term loans heavily secured by real assets that were self-liquidating, like lending to a farmer. He puts in wheat crop and comes up in the next season and the loan is paid off. Makes it self-liquidating. It's not the way it works today. All these banks, I mean, lending out money, like Mark Zuckerberg got a 30-year mortgage at 1%. I read this in the journal. I couldn't believe it. I mean, how is that possible? It's crazy. It's all insane. So I hope I'm being clear. All these banks are bankrupt and they're all subject to a run. And the only thing they can, and the Federal Reserve can print up money and lend it to the banks and give it to them. And by printing up that money, it's going to create more inflation. So there's no way out. Actions have consequences, cause and effect. So yeah, it's going to get much worse from here, I think.
So if I have this right, every single bank in existence in the modern banking system, if its depositors withdraw their funds, you could say in mass, but it doesn't have to be a huge portion of their overall deposits, then the bank will fail. Is that true of essentially every single bank that's out there now?
Yes, because they've all made loans. Look, the terms of of uh, of savings accounts and checking accounts, which are totally that distinction has been lost between savings accounts and checking accounts. Um, Everything but certificates of deposit, which only last for 6 months or a year. All the money theoretically can be withdrawn. And when it comes to a car, build a house system shouldn't do. Those are consumer loans. They're not productive loans. Most of the banks are doing consumer loans, not production loans. So yeah, I'd say that the whole system is rotten to the core. I don't. Yeah, I think it's going to get a lot worse. And this is why you ought to be buying gold and silver coins. And if you want to speculate, you can buy gold mining stocks. Uh, but yeah,
Okay. One of the so there are two one of the big reasons why I think a lot of the regional banks are a concern for people at this point is because a lot of the commercial real estate loans that are made are apparently made by these regional banks. And there's really two types of commercial loans. There's the residential ones, and then there's the office towers and the retail space and stuff like that. But apparently that's $20 trillion market, and about $5.5 trillion of that is commercial real estate loans that are adjustable, and a lot of that has to be refinanced in a relatively short term basis, like 12 to 24 months. And it's all super cheap money. It can be impossible for them to refinance it. So those are ticking time bombs on everyone's balance sheets.
yes. And it's actually worse than that because partially due to that, uh, commercial real estate, commercial office buildings are being deserted. I mean, everybody wants to work from home. They don't want to go back into the central cities. It's costly, wastes a lot of time. Um, and the central cities are not very desirable anymore with lots of crime and so forth. So you're going to have see through office buildings. You already do. And you're going to have, I think, a lot more of them. And those mortgages aren't going to be paid, and the bank isn't going to get its money back. So, and I guess as you pointed out, most of these are um, somewhat smaller banks that are making these. Yeah. So it's like that idiot that we had a show where we mentioned him, Kevin O'Leary,
Yeah.
uh, who's an economic ignoramus. What one thing that he said another time is that, well, the US doesn't need all these thousands of little banks. Look at Canada. Look at Australia. And in Canada, we only have 5 major banks and it works just fine. You know, well, sure, those Canadian banks are really instrumentalities of the state, but that's not the way it's supposed to work. Uh, Terrible statist. But
Mm.
the US is moving in that direction, which Kevin thinks is just fine, where you just have a few big banks, Morgan and Wells Fargo, that the government can monitor and bail out, and little banks are all acquired. And yeah, we're
Well,
moving
it
in
se
that direction.
well, it seems like what's happening right now, if I had money at a regional bank, I would move it. I mean, I hate to say that, but it just seems like you to be safe, you almost have to move to maybe not JP Morgan, but one of the top 5 or 6 of them because it just seems like they could fall like dominoes because it is just a psychological thing. If everyone gets worried about it, then they go under, and there's like nothing that can stop it.
But I'm sure the Federal Reserve, the FDIC, Federal Deposit Insurance, is really
Yeah.
just a sticker principle, giving people confidence, thinking they're insured, but it doesn't have the assets. The Fed will bail out the FDIC, and the FDIC will make good accounts of up to $250,000. And you can have several accounts. Your wife can have one, you can have one at the same bank. So I don't think they're going to let that go away. But you shouldn't be keeping large amounts of money in a bank to start with, because your dollars are losing value at not just 5, it's 10%. Who knows what the numbers are per year? I mean, there's better places to put your money than a bank. Even a money market fund that's invested 100% in T-bills is giving you a higher yield and a lot more safety, because the U.S. government's not going to default on its own loans than a bank. So banks. The industry itself is in big trouble, and it should be.
What do you think? You said that U.S. won't default on its debt, but you were having that regular theater around the raising of the debt ceiling again in the political environment in the U.S. Is it more, as I suggested, theater, or do you think that there really is a risk, a real default?
No, I'm sure they'll raise the debt ceiling. Oh, maybe they'll abolish the idea of a debt ceiling.
Right.
I mean, come on, let's stop kidding ourselves. The annual addition to the debt is $1 trillion. It'll be $2 trillion, $3 trillion. And if things really get out of control, if it starts cascading, there's no limit. So the fact these guys say, well, we'll prudently raise this. Yeah, they do this automatically. It's theater. So the Republicans can get to pretend they're prudent, and the Democrats can pretend they're the careful little guy. With it's all a stupid charade.
Okay.
But the fact is, the U.S. government as an entity, and it's not we the people, the U.S. government is a separate entity, like General Motors or Apple. Well, Apple's productive and solvent. That's not a good. It's like the U.S. government is like what's a big corporate fraud? Or like FTX, or what was that thing that Sam Bankman fraud?
Yeah,
Was it
FTX.
FTX? Yeah, the U.S. government is a separate entity with its own interests and its own objectives. They're not the same as yours or mine or any other American or the American society at all. It's a separate entity. It's a parasite. It's like FTX, and it's bankrupt. But because it's so powerful, and the meme of the U.S. government being so important and powerful, yeah, it's still there, but it's a charade, just like their debt ceiling.
Hmm. Interesting. Interesting. So, what about though in the
When I say these things, I think the average person that listens and the average person doesn't listen to this stuff, because we have our own group of people that are open-minded about these thoughts, which I think are real and realistic. The average person will say, that's just ridiculous. And the U.S. government is going to be here forever.
Yep. And there was people around, with the Roman Empire as well. They thought no way Rome would disappear or become irrelevant.
Yeah, it didn't seem possible to the Romans. They had all these buildings and the legions were out there and so forth. But Rome went bankrupt financially, and it went bankrupt morally, and went bankrupt in every way possible. And the next step was the Dark Ages. and they lasted a long time and they were unpleasant. But we don't have to get the dark ages here because actually the singularity is on the way. This is really going to be interesting watching what happens over the next 20 years. Maybe scary, but interesting.
Do you think that with the US and with Rome, do you go bankrupt before your ethics get corrupted? Or, or like which one
Mhm.
happens first?
I think your ethics are corrupted first. You start doing things that are wrong and dishonest and stupid. And that leads to financial bankruptcy. So the fact that you make a mistake, perhaps, and lose your money, it can happen a number of ways. Bad investment, theft, all kinds of reasons you can. It doesn't mean your ethics go bad, but if your ethics go bad, you're going to lose your money eventually. I'm convinced of it personally.
Mm.
I mean, can I prove it? There's a lot. There's a lot of rich guys that seemed like you know, they were essentially criminals that died wealthy. So it doesn't always happen. But in Leviticus, it said, "Oh, the bread goes not to the wise, nor the race to the swift, nor the battle to the strong." But as Damon Runyon said, "But that's the way to bet." So it doesn't always happen, but it almost always happens that you know if uh, if you have bad ethics, it'll catch up with you. Maybe somebody will kill you if they really don't like you, or other things on a gradient scale going down from being killed. So it's kind of better to keep your nose clean and try to make as few moral mistakes as you can along the way.
Yeah.
It's safe and you feel better, and it'll work out better too.
What do you
Probably,
what do you
probably.
probably yeah, I think so. But I think what do you think about more I guess market question I had about in the short term, things like oil have been, been definitely been hit pretty bad recently. Oil stocks been hit bad, and if you imagine an economic financial crisis, then that could lead to lower demand for oil, and I guess that's why that's the prices are getting crushed on there on that side of things. But I know that you've talked before about you're very bullish on oil and some oil stocks in particular, and energy stocks in general. I guess. What do you think do you do you is this a like a buying opportunity as they some of them have been crushed recently? And then the dividends are crazy that some of these things pay.
Yeah, and of course, historically, when dividends are very high, people say, "Well," market players correctly say, "That's because the dividend is about to get cut." The stock price collapses, and you know for a while before the dividends cut. The dividends really high. Uh, yeah, it's possible, but I'm not too terribly worried about it. I really am not because two arguments. It's that oil consumption will fall as the Greater Depression hits, but uh, insofar as we have a civilization in the world runs on oil, and the all this ESG and DIE stuff, which is limiting the new production of oil, that's going to be washed away in the future. Although it's limiting production right now, um, and in places like China and India, which are not caught up with ESG, their consumption of oil is going to continue increasing. I mean, how stupid are these people that think oil is going away, which is the most compact form of energy we have, when they've been saying recently, and I'm sure everybody's heard this, that they're trying to run the U.S. military on electricity. It's completely impossible to run the U.S. military on batteries. I mean, I'm not just talking about tanks. That's absurd. I'm not talking about planes. That's currently absurd. But to even make the statement that you can run the U.S. on the U.S. military on, these people are psychotic, even saying things like that. So
Yeah.
the demand for these things, oil and gas, are going to go up. And I think gas is already at the bottom. Oil is down to like, what was it today? But I see that it was down to $68. It's getting pretty cheap now. So, answer the question. No, I'm not worried about it. I really am not. Oil prices are in an equilibrium area here, and the next stop is higher because there are geological factors and technological factors that are making the amount of oil more expensive to produce. We'll never run out of oil. It's just a hydrocarbon and hydrogen and carbon and oxygen. Very, very common, simple atoms. People learn to manipulate them and create hydrocarbons from almost anything. That's all possible. That all can happen. But answer the question right now. Look, maybe I brought this up before, but I'll mention it again. The first real hit I made in the stock market was back in the mid 70s, starting 1976, when there were a class of South African mining stocks. None of them exist anymore because they've all been absorbed into other companies. But their names were Grootfully, Leslie Bracken, a couple others that I forget. But I remember those in particular. They had current indicated dividend yields of 50 to 70%, and the dividends went up from there. So, and there were reasons for that, which I've talked about before. So I'm not too worried about the oil stocks right now.
Okay. All right. Any last comments on the current markets, the banking crisis, and the Fed's announcement today of interest rates? Anything else you'd like to add?
Uh, I don't want to be in the general stock market right now.
Hmm.
I think it's dangerous. I don't want to be in dollar either or in banks. Certainly not over the insured amount. Don't want to be in bonds. I'm sorry. The only thing I can think of is the best place to be is gold and silver coins. Have a lot of them. Put them not just in your home country, but someplace else in addition. Have those two things. And if you want to speculate, I'd speculate in resource stocks right now, which are hated, high yielding, and nobody wants them. They're high yielding mostly because they're so hated. So I guess that's my story, and I'm sticking to it. And we'll see if I'm right or wrong in the weeks to come. I can't wait to find out myself. I think I'm
Yeah,
right.
it'll be interesting. Well, and if people want some of your specific selections of resource stocks, they can subscribe to File. There'll be information in the description of this video, and you can see the current picks we've got there. So, okay, I think we'll leave it there for now, Doug. Thank you very much.
Fantastic, Matt.